Hello, hello. Welcome back to the Mistress of the Damned. I am your Mistress Katrina. If you are new here, welcome. Glad to see you here. This is where I am reviewing my enormous library of boxed up books. Then I give you a synopsis, review the book, tell you what I think about them. The books aren't going to remain boxed up. I'm redoing my office library, and then they're going to be back on the shelves. Anyways, that's not necessarily relevant. If you like books and aren't sure what to read next, just want some recommendations, hit that subscribe button, like and share my videos, leave me a comment or a recommendation in the box down below. I am always looking for more books to add to my absurd collection. Today's book is Investing 101 by Michele Cagan, who is a CPA, Certified Public Accountant. The subtitle is A Crash Course in Building Personal Wealth. This is one of those books that sort of landed in my hands during a random browse through Barnes & Noble. And since I would eventually, someday, like to pay off both my student loans and retire not penniless and sad, I bought it. Only to pay off my student loans and not retire a penniless sad person, I need to first read the book and then implement what I learned in it. So let's see how this goes. Step 1, reading the book. And just like the title says, it's a crash course, okay? It starts with basic economics. It moves into describing what exactly stocks, bonds, mutual funds, everything, what all of those things are. And then she describes the different styles of investing and the key differences between them. And it's very good for that, right? If all you need is a quick rundown of what the heck people are talking about when they talk about a stock or a bond or a short sale, short stock, then she goes into all those things. She explains that and she gives basic rundowns on numbers so you have a general idea of what's going on when people say they're shorting the market. And one of the things that Kagan does repeatedly underscore is no matter what type of investment you choose to make, it's very important you research what it is you're buying, and you are buying them. You're buying the stock, you're buying the bond, you're buying a bit of a fund, and you want to research all of those things before you invest in them. You don't want to throw your money into a company you don't believe in, that you don't agree with. And that was very smart. She repeatedly underlines that throughout the book. Another point that she underlines throughout the book is that investing is risky. There are no guarantees. You could easily invest and lose everything, and that's always a possibility. Same with gambling, right? If you don't like to gamble, be very careful with the stock market. While you generally have a decent chance at better returns than, say, a slot machine, it's not a guarantee. So assess your ability to accept risk and live with it before you invest. And one of the things I like about this is she has multiple points in the book on not just how to do the research, but where to go for the research. She includes websites that are useful and all public knowledge, public access. Some of them are government funded websites, which means they're going to be absolutely free. So, and that's amazing. And that's, I always tab out my books to figure out what I want to talk about and what points are worth revisiting and, pick out quotes that I want to throw on my Instagram or whatever. And some of these tabs are definitely the websites that I'm going to go back to because that's going to give me a jumping off point when I start figuring out what I want to invest in. So she talks about the research, how research is so important, how you can mitigate your risk by doing your research. But if you don't really have time to do research, you probably shouldn't be investing. She actually doesn't say that. That's my own personal opinion. If you don't have the time to research what it is you're doing, maybe the stock market isn't for you. She does have alternate plans. You can go through a stockbroker. You can trust your money to a financial manager. And those are viable options. If you have a good manager, if you know somebody, if you have somebody with a recommendation, somebody you trust with a recommendation for a financial manager, those are definitely viable options. I don't trust people, so that's why I'm like, maybe I shouldn't just invest if I don't have the money, if I don't, do the research. I don't know. I might. Anyways, if you could tolerate even a little bit of risk, investing is how you make your money work for you. Okay, remember last month when I was reading The Richest Man in Babylon, and one of the steps to financial independence was make your money work for you. That's what investing is, and that's what The Richest Man in Babylon was talking about, was investing. And that's how you get your money to work for you. Now, the stock market and all the different ways to invest in the stock market is one way to invest. Another way is real estate, and she does go into the real estate market, and it carries its own risks, some of which is just bad tenants, down markets. It can be harder to find tenants, and even if the house is unoccupied, then you still have to pay the mortgage on it. So that's a risk. Another risk that's was heretofore unknown until 2020 is government intervention. Yeah. Remember when the government put the kibosh on collecting rent and wouldn't let landlords evict because of the whole virus thing that was going on last year? Don't want to say it because I don't want YouTube to flag me and ban me. I mean, the courts overturned that. They said the government can't do that. But in the interim, the landlords were still on the hook for those mortgage payments to the banks. The mortgage doesn't get put on hold just because the government says, hey, the tenants don't have to pay. That's still needed. Okay. Of course, that goes the other way, too. If you're a bad landlord, if you're a shit landlord, sometimes the government will put the kibosh on paying rent until you fix the things wrong with the property, but that's a separate matter. Don't be a jerk, be a good landlord, and investment properties can be a pretty solid way to build up a portfolio. But there is risk, even if it's not seemingly as risky as the stock market. There are definite risks with owning property, but it also has a tangible, real asset that you can put your hands on. And that's something a lot of people like, because it's not, if you go online and you buy stocks in the stock market, you own digital property, right? It's not like they're going to actually send you a paper copy of the stock you own. I think they used to do that. That's how it used to be counted. But now it's all digital. Another method of trading is currency and commodity trading. Currency, like it sounds, is the world's money. So you can, invest in the yen, you can invest in the euro, you can invest in the dollar. Commodity trading is those things life needs: food, oil, precious metals. Cagan also touches on socially responsible investments. So if it's really important to you to support green companies, that goes back to investigating your investments, do your research, make sure the company that you're buying into, that you're purchasing stock from, supports the movements that are important to you. And that goes to being a responsible owner, not necessarily, responsible investor, responsible owner. Make sure that that's going to back what you support. Cagan spends a chapter hitting on two of the main reasons people get into investing, education and retirement, right? Both of my reasons. A little late on the education for me, right? The education she's talking about is setting up a savings plan so that your children don't have to go through student loan debt. They'll have a nest egg upon which to fund their college education. Won't work for me because I've already graduated. My investing for education is strictly to get some dividend dollars rolling in so I can pay off some of those absurd student loans. Retirement, though, that's another big one. And it's the other reason that I read this book. And I'm already off to a good start here since my day job has a 401k. So if you are fortunate enough to work for a company that offers that, contribute to it. It's an easy way to start a nest egg for retirement. And that leads me back to learning to invest on my own so I can retire with more money. It's like Spaceballs. Quest for more money. I need more of it. Who doesn't these days? So it's not a very long book. It is just full of quick bits of advice, quick little tips, little bits of knowledge. It was written in 2016, so I'm not sure if that predates investing apps like Stash and Robinhood, Acorns. Cagan does mention online trading as a growing method for small investors. She does mention TD Ameritrade as an online broker. I think she said E-Trade's in there somewhere. Certainly it was, I know those websites were around. It's a good basic book. It gets one familiar with investing terminology. It addresses some basic concerns for most first-time investors, as well as offering kind of a quick quiz to help you identify your risk tolerance. And it's one of those quizzes you need to be as honest as possible when you take, so you don't overestimate your ability to handle market downturns, because those downturns will happen. All right, stocks rise, stocks fall, and those downturns can be really scary when you watch the bottom fall out and suddenly your portfolio has lost half its value. And I only know that from my 401k. I'm like, oh, I'm having a good year with my 401k, or oh God, what just happened? It happens, all right? That's what risk is, and you need to be comfortable with it to a degree that you can be if you're going to be investing at all. The final chapter addresses some of the greats of the investing world, including Warren Buffett, who's practically a household name at this point, and Benjamin Graham, who was Buffett's mentor and the author of The Intelligent Investor, which I was pleased to see because that is also in my library. And I kind of want to read that sooner rather than later because I really do want to start trading. I think the market's still going up, so it's perhaps she did address the difference between a bear and a bull market. You may have heard those terms. I don't remember what they are specifically, at least not memorized. I'll have to go back and find the little tab that identified that so that I can figure out when is a good time for me to start buying. But I want to be ready to buy when I start identifying what I'm interested in. And so I'll probably be reading The Intelligent Investor soon, but not next week. Next week's book is going to be Who Stole Feminism by Christina Hoff Sommers. So if you are interested in that particular bit of political thought, join me next week. Thanks for watching. Like and share that video. Hit that subscribe button. Leave me a comment. Let me know what you think. And I will see you guys next week. Bye.